All right. Today's SPY was up 0.27%, and we're still hitting that resistance at 455, and we are closing just a bit above it. But more importantly, today intraday, SPY did break out to a higher high, which exceeded the high from July 19th. So if you look at the smaller time frames, we officially have the higher low into the higher high, and tomorrow being FOMC, there is a very good chance we're going to hit that price target up there at 460. Now I say very good chance, but obviously anything is possible, and we still are sitting very close to that resistance. So whether or not SPY is above or below 455 should be your guide for tomorrow as far as intraday trading. If we start breaking above 455 and we can hold that breakout, we could easily run to 460. So that's going to be the high for tomorrow. And if we get rejected from 455, we're still looking for that support to hold right around 452. So 452 to 455 is your extremely tight trading range. And then when we break that range, it's likely going to give us direction. Below 452, we're looking for 448 and the gap fill at 443 and that rising 20 daily moving average, which is going to be a dynamic and moving target. So you know all of your critical levels, and I just want you to remember this is still a very powerful bull trend. And in a very powerful bull trend, price action does not need an excuse to go higher. That is still the expectation. So in order to see something else happening, we need to see price action proving it, and that's going to require a break of that support at 452. On the NASDAQ 100 triple Qs, we were up 0.68% today, and the triple Qs are back above the 5 EMA, and we still have the bull trend. And while we got very close to filling that gap at 374, we did not do so. So this rising 20 daily moving average is about to pass through that gap, and we still have the bull trend. And we also have a very small gap up there below 384. So as I've said before, in a bull trend, it's possible we go higher and hit that higher target and then come fill these gaps at a later date. In some ways, I actually prefer the scenario that we go higher before we go any lower. But obviously, the stock market couldn't care less what I think. But we still do have a bull trend, which obviously favors higher prices. So in the triple Qs, I would only get more bearish if we start closing below the rising 20 daily moving average, because that's telling us we're likely losing the bull trend, which means we could go through that correction. If we break below the 20 simple moving average, that's going to be a breakdown below about 374. And if we break 374, we do have a gap down there at 368 and the breakout of support at 372. On the Dow Jones, we were up 0.07% today, and we have the second day over that resistance breakout at 353. So it does look like we are going to that higher target at the price target at 360. If we fail to hold this breakout, we're going to see it immediately by breaking down below 353 to 352, and then we'll likely go fill that gap below 350. This is a bull trend, so I am expecting higher prices. On the Russell 2000 IWM ETF, we were flat for the day, and we're still closing below that resistance at 195 with 2 days in a row of seeing sellers above that level, which may mean we need to come down and fill the gap at 190 and test that rising 20 daily moving average before we can go any higher. So watch that critical resistance at 195, and if we break through it, we're looking for targets at 198 and 201, and critical downside support remains 190 and 188. On the ARKK ETF, we were down 0.3%, and we are coming back down to retest the breakout of that bear market resistance trend line, so you're going to see critical support right around 45 to 46, and as long as we bounce from that support, it is going to confirm we're exiting the bear market and going into the bull market. On the VIX, we were down 0.36%, and tomorrow is FOMC, so if we're going to see a spike in the VIX, it's going to be very soon, and as I continue to tell you, that is going to require a close above 15. It is possible the VIX spikes out of here, but we need to see it in the price action, which means we need to see the VIX out above 15. Otherwise, we're still in this very low fear bull trending environment. On Bitcoin, we're flat on the day, trading near that lower Bollinger Band as we're breaking out of the bull flag to the downside below that support at 29,000, and below 29,000, we're looking for strong support at 28,000, and then the rising 200 daily moving average. In order to get bullish, we need to break above 31,000, and then we're off to the races to higher targets. On Tesla stock, we were down 1.4% today, and you can see a very clear rejection below the 20 daily moving average. So that is definitely a sign of caution that Tesla could be starting to go through a correction, because we broke down through the rising 20 daily moving average and we're now rejecting it as resistance. So I would not get bullish on Tesla until it can break through that resistance at 274, and then we'll be looking for the gap fill above 289. Below 274, we're likely coming down to the 50 EMA, which is right around 246, and then below that, we likely fill the gap at 235. And as long as we can hold the breakout at 230, it is still possible we're going to higher prices, but we just have to finish this pullback and correction. On Apple stock, we were up 0.45% today, still failing to break that resistance at 194. And as I've said before, we hit the price target, so there's no reason we need to go any higher. It could be possible we're about to break through the bull trend and go through a correction now, but we need price action to prove it. And we need to start closing down below the 20 moving average and the support zone right around 191. Below 191, we'll likely come back down towards 188 and then 185. So jumping back over to the S&P 500, tomorrow is FOMC, which is going to give plenty of volatility, but you know the general direction is still bull trends across the board, and in some indices like the triple Qs, we're sitting right on top of some very important support levels. So with bull trends, you always want to get more bullish near support levels because that defines your risk. And it is a bull trend until it's not. So in order for us to say that we're going lower, we need price action to prove it. And so far, we have no proof that we're going any lower. It's possible we're actually going much higher. So continue to follow the trend because the trend is your friend, and always manage your risk around these critical levels. And if you trade with the direction of the trend, you should have a much better time in this market. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server. You can find out more about either of those services and learn how to subscribe by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.